How many coins can't you get if you want to buy versus the coins that you can get? Like years down the road, I was doing another startup. We won't bother going into that, but one of the lead developers said that Bitcoin broke $1,000, um, and I was like, "What's Bitcoin?" And he explained it, and I was like, "Okay, that's like digital gold." And this is post. This was tail end of 2013, on the end of that bubble, and if I recall, yeah, so that was it was just exploded in this bubble, but like it's post 2008, right? In 2008, we had the world financial crisis, and before that, I had exited my startups, and I had a little bit of money, and I was starting to learn how to invest that and trade that, and one of the things that we did, like some of us that we did, my friends that were kind of mentoring me how to work with financial markets were saying, gold is the thing because this whole thing's going to collapse, which it did. The financial markets did collapse. And so I knew a little bit about gold. And then I realized that now you could replicate this thing on the internet natively. And I was like, well, shit, this thing just got invented a few years ago, and it's early, and you can look at it and it's just bleeding edge. You can cut yourself on it. It's hard to use. And I figured, MP3s was like that, um, you know, 12 years ago, and now the iPod's out. And I give this 12 years to get to mainstream. And I was like, I just ran the ratio of what Bitcoin was valued at versus gold. And I was like, if we give this 12 years to get to gold, that's $450,000 per coin. And right now the price has just crashed from $1,000 to $600. And I was like, okay, I'm going to start buying this, and I'll buy one Bitcoin just for fun in case it goes to 450. I won't be pissed. And then, I later on traveled to Bali, and there was a really good
Yeah.
Bitcoin meetup there, and met some really interesting people, and they started telling me the lowdown on Bitcoin and how it really works and all the details around it. And I was like, no, this is really interesting. So as the price was sliding down in 2014 and the longest bear market we had, I was just continually buying as it came down. I think my views have changed a lot through the years. I think it's valid that my thoughts have changed through the years too, because the ecosystem's changed. Um, like there's some validity to what they're saying, but there's also some things that are not valid. Like it is true, Bitcoin is now probably within its last 100x, possibly last 10x, 10x to 100x. And we've had like something like tens of thousand X to get to this point. And so, like, I now think of Bitcoin as money, as hard money. If you were talking in the crypto sense, it's the equivalent of the US dollar without the fiat crap, but it's where you'll park your store of value. It's where you will, set and forget and go get on with your life. Now, if you want to try buying these altcoins, and try and get the 8,000x. Yeah, that's possible. But that's a profession. It's called trading.
Hmm.
And it is a full-on amount of time to where you're going to make money or lose money. And whether you're good at it or not will determine whether you can get 8,000x or you lose all your money. 90% of traders lose their money. Only 10% win in leverage trading. Often you get these situations where the traders are like, we just had this recently, the traders are just screaming bearish. They were like selling, shorting Bitcoin. And we had this crazy divergence from what traders were doing, following their price and volume metric data with all the indicators going, this is horrific. Meanwhile, when you looked at the blockchain and the wallet data, it was like, my God, the entire world is buying Bitcoin and locking up for the long term. Eventually, these traders are going to run out of coins, and there's going to be a complete shock in the system, and this price is going to go skyrocketing, which is actually that played out. And so you get this situation where, essentially the fundamentals underneath this investment network take over the long term. They take over. Under the short term, you get the exchanges sort of moving the price around a little bit. And those, another thing is that those two exchanges, one being spot trading the underlying, you got the derivative guys, which they trade 10 to 20 times more volume, and that changes a lot. Those guys actually can influence the price, and so it's an interesting dynamic where you see these two games play out between what traders try to do and what investors are actually doing. So it's actually quite interesting, and you need to really understand a market. You need a crypto market. You need on-chain analysis, and you need to match that up with the derivative side of things, what the speculators are doing, and with those together, you can make fairly reliable longer term predictions around the market. So one of the ways in which I measure demand and supply, and ultimately a lot of the things I do on chain, is grappling with what is the real demand and supply between investors. There's a ratio you can run between, it's really simple, I call it supply shock. It's how many coins can't you get if you want to buy versus the coins that you can get. So, as the amount of coins grow that in the supply that aren't selling, I'm not selling, versus the people that are super speculative and they'll sell it at any price if they think the price is going to go down. So you run that ratio, and there's many ways you can go who's not selling versus selling, right? There's many views into that lens. And one of the lenses that Glassnode use, which is the provider of data I use mostly, they look at who are long-term holders based on their coins not moving for 5 months. So anyone who's held their coins for more than 5 months, those coins aren't moving. They haven't moved in 5 months. They're probably not going to move. You're not probably going to be able to buy those coins. Whereas any coin that's been circulating within the shorter time frame, there's a fair chance you can get those coins because they'll be moving between hands, And so you run that ratio, and because it's a very long term, it takes 155 days for a coin to age from short term to long term. It's a very smooth graph, and it's very macro. It's very sure, right? It's very once a coin's reached 5 months of age, it's unlikely to change its behavior in a volatile way. And so when you run supply shock on that, you'll see the demand, essentially supply shock going up to these peaks, and those peaks coincide with mass accumulation by these long-term investors, and they also coincide with all the historical bottoms where a floor was put on the price by long-term investors because they keep accumulating, and anyone who's selling, they buy, and it keeps the price at the bottom. And eventually, once it dries out, no one's selling, the selling's exhausted, price moves up. And so we were in one of these accumulations. The last one ended at October last year. We had a decent spell of many months where we're at peak accumulation by these long-term holders. And then the price started to run up, and it started running up. And then those long-term holders started to divest and sell their coins out. And that actually has led, it culminated with the price dropping down to our $30,000 range from the 60 even 64,000. And then since then, the same pattern's happening, that they're accumulating, but we're not actually at peak accumulation. And it takes, you can gauge the time, you kind of gauge the time in which this happens. And I'm like, it looks like we've got another at least a month or two to get to. Well, I don't actually make predictions. Everyone says I'm predicting this and that. All I'm doing is reading the value of a particular model that I have that continually tracks the price over its entire history.
Yeah.
And that model gives you an upper bound of where price can go. And every past top of a bull market has hit that upper bound and dropped. So if you assume that we hit, you get a top of the market in a cycle, you know, it was like between 300 and 400,000 was the projected upper band for December. And that keeps changing because as we get closer, we get more price information. And now it's like, I haven't looked recently, but I think it's around 200,000 is where it might be the upper bound. But if you take into the context of this other on-chain data we have, it means that we're not going to have a market top, like a traditional cyclic market top, where everything goes into a mania phase and everything runs up and then we have a blow off top and we come back down. We have this drunken walk. It's like the S&P 500. It just keeps wandering upwards.
Yeah.
So it can be in the midline. And so the price could be anything between two models that I have, if they hold. Models are models, they sometimes break. So the upper bound is like 200,000 plus, right? And then there's the lower bound, which is, you know, I think it's below the current price by significant amounts. Yeah, I know. It's like, it's the last of the 4-year cycles. It's the last of this, like if you look at the price chart over 12 years, we've had 3 prior cycles, and every one of those, it's done a huge run up, it's done a huge pullback, but retains most of its gain from the last cycle. And then it's done it again and again. You know, the last one we went from below 200 or like 150 was the bottom, and it went to $20,000, and then it pulled back from $20,000. Imagine investing $20,000 and then like you come back to at the end of the year and it's like $3,200. Like that was the last cycle. That was the previous cycle. And the ones before that was more carnage. And we waited like a year for that to you know, purge itself. And I'm just saying that kind of experience is likely to not happen again. If we were to look back in like 10, 20 years time and we look at the price chart of Bitcoin, you go, look, there's 3 cycles, whoop, down, and then on the 4th time, it doesn't do that pattern. And it becomes like this drunken wander of price discovery as it finds its fair value as Bitcoin, you know, spreads to 1 billion people or more, which is actually projected to do in the next 4 years.